stock of the day. As I said, these updates coming through, starting to. JB Hi-Fi, a Mark Moreland favourite, has been for a while since the call has been going. Wow, what an update. It's seeing growth across the board in its unaudited full-year results, managing to grow its sales over 7.5% to just under $545 million. Company chalk out the result putting it up to a strong multi-channel strategy in the second half as COVID restrictions ease. Shares popping into the green this morning. What do we think, Mark Moreland? Everyone's saying, oh, recession coming. Consumers going into the bunker. They spent all their money previously. There's not going to be a carryover.
That's right. And inflation.
Yeah. All the doom and gloomers. And then this comes out.
Well, I think it's a very, very good sign for the quality retailers.
The sector.
Yes, not all retailers, because there's really good operators and the rest.
Right.
JB Hi-Fi has consistently been a first-class operator. They've got one of the lowest cost per sale measures in the world. It's a brilliant company. Accent Group and Nick Scarlett, and there's a few others that we have in that same group.
Yeah.
So it's a very good sign. I thought it was particularly good considering the massive lift they had on earnings through COVID. Now we know why, because everyone was at home and they were fitting out their family offices and so on. But to get sales growth now after after having such a big run up, I would have thought that the sales would have actually gone down. Not on.
Well, that's what everyone was thinking.
Well, it's reasonable conservative.
That's why share prices were hammered down.
That's right. The good news is that JB Hi-Fi now it's still in the bottom quartile of its PE range. So current PE is only 9.8.
Yeah.
And that's prior to what their earnings outlook. That's trailing earnings.
Yeah.
It's very, very cheap, and the EPS growth is running at 20% average now over the last 6 years. So it's got very, very strong growth, very high stability. All its metrics are excellent, and it's in the bottom quartile of the PE. Now, what that transpires to is what your returns are going to be. And from Team Invest's perspective, we've got a calculation of 17% per year compound total return over the next 5 years on a margin of safety.
Right.
So that's our conservative numbers. Okay. And our default numbers, which means if JB Hi-Fi can just keep going the way they are, about 30% a year.
Wow.
So, and that's assuming a comparable PE in 5 years' time.
Okay.
So very good.
So a buy at these levels.
It has to be.
But are they representative, you point out, of the quality retailers going forward? Is this a result that says, hey, the wisdom of the market saying every retailer's sales will be down has missed the mark and missed the strength of the economy and consumers and how much money consumers have got at the moment?
Yeah, but I think it's also a mistake that investors make generally is when they look at a sector and say, oh, I think that sector will be down. They may be right overall, but you don't make any money doing that, because at the end of the day there are outstanding businesses and a lot of garbage.
So it drags the outstanding.
And the average may be down.
Right.
It may well be down. And next year, by the way, inflation's relatively new phenomena for us, isn't it?
Yeah.
So we think JB Hi-Fi will be able to push through all their inflationary costs without a problem. So I don't expect it to hurt them at all.
Right.
Going forward, where it may hurt them is on consumer demand if unemployment goes up, which it isn't at the moment.
No.
If it does, and if interest rates go up more and start affecting people's disposable income based on mortgages and rent, all those ifs, then it might make it harder.
Right.
Does that mean they'll do badly? No. Is this a good time to buy it? Absolutely.
Michael?
I agree that the situation is a lot tougher now than what it was 2 years ago, and this is, I agree, where you need to focus on the quality names will shine through. Obviously 2 years ago, all these online retailers were making money and all the share prices were going up, and you just throw a dart at the dartboard and you can make money in the retailing sector, but now it is a bit more discerning, and if you're in that space, JB Hi-Fi is one of the better names. Very impressive growth that we've seen in today's numbers, and that also bodes well for the dividend. I think they go ex-dividend in August. They generally pay a good dividend, so based on these numbers, you'd assume that they should once again pay a good dividend. So if you're after dividends, that's great. Still some risks out there as highlighted, inflation, so the cost of goods. staffing, you know, paying staff, that could potentially be an issue down the track. I honestly don't know where we will end up, say, in several months from now in terms of inflation and how it will impact JB Hi-Fi and whether the consumer still has the appetite to spend money on these goods. But yeah, look, I mean, it is, as I said, it's one of the better businesses in that sector. In terms of me, for whether it's a buy or not, I prefer to see something that's starting to get more into a trend. In terms of pricing over the last sort of 18 months, JB Hi-Fi's traded in a bit of a range between about $43 and $55. So after breaking down and several weeks ago and failing to find good buying support, that was a bit of a concern, and now it's got back to that $43 level. Yep. I'd just be very curious to see over the next few days if we still see the sellers step up and dump the shares here. I mean, if they're pretty much done with the selling and the shares can hold in around 43, even trade to 44, I'd rather give up that extra sort of dollar in the share price and know that those sellers are out of the way, and then I think the share price can recover. So for me, it's just keep an eye on it.
Sort of a hold at the moment.
Yeah.
Okay. All right.